think they did what they did here? Well, it seems very obvious that they did what they did here because they were trying to get a long accumulation in here. They've taken the price down pre-market into 2 o'clock, haven't they? And then at 2 o'clock, what have they tried to do here? What actually has taken place in here at 2 o'clock? They've obviously bought the bottom edges here. They've bought the bottom edges here, and they've bought the bottom edges here. So what's the market maker doing? The market maker is at the cash open. They're trying to accumulate, for argument's sake, let's say it's our 2,000 contract long position. So they're trying to accumulate 2,000 long contracts. So if the price then spikes higher, they're going to pull away their liquidity because they want to make as much money as possible, right? So if they've accumulated a 2,000 long position here because they know that the market's bullish at this stage, then when the price does that, they don't actually lose any money. They actually make a fortune. Because all they're doing is this sell trade here at 87, they bought it at 69. I mean, they're still making a lot of money on that trade. You know, so they can take it higher and they can take it higher and they still never lose any money because they've built up so much long position in here that they can pull away the liquidity during that phase. And obviously, the faster they pull away liquidity, the more money they make. You know, so they actually, they're incentivized to get really away from that trade as much as possible. And that's why you see these things happen. That's why you see this. This is why we pay so much attention, coming back to that original question about the cash open, is if we can see what they're doing at the cash open, either pre the cash open or post the cash open, we're very, very mindful of where they went for the cash open. Because if they do this, you're already looking at it with that suspect eye of saying, I think they just bought this bottom edge. Because what are they doing? What actually are they doing? Well, if you go back to my tweet from last night, this is why we thought it was very important to pop this into the tweets, just so that you had it and so you could look at it and so that it could remind you of this. What did I say last night? If you're bullish, so this was 17 hours ago, right? If you're bullish, you'll see the liquidity being bought into at the lows, especially when there's big volumes. So watch for the market maker marking up and get ready to join in. So is the liquidity being bought at the lows? Yes or no? Well, we can only tell that by seeing level 2 buying. So when the liquidity breaks a low price, does it go straight back up or does it continue selling? Well, as soon as the price broke a low price here, it went up. As soon as the price broke a low price here, it went up. And as soon as the price broke a low price here, it went up. So what are they doing? They're buying the low. If they're buying the low, you've now got a narrative. They're bullish. The market makers are bullish. Regardless of what else you're seeing, the market makers are bullish. And if you've been playing this and you've now seen that, you know who the patsy is. The patsy is the guy that sold into the bottom edge. Do you agree? Because every time they sold the bottom edge, they've been getting trapped on the sell. So you know who the patsy is. So guess what? You're not the patsy. So that's a good thing, right? You're not the patsy because you've seen the guy getting sold and getting trapped in here. You see them. So if you can identify who the patsy is, you're not it. So you can either trade the liquidity, so you're using that liquidity information, or you are the liquidity. So the sellers here are the liquidity. They're the patsies. And what you're doing is you're buying from those sellers if you want to get involved in that as a process. And the idea is that from that, this is what happens. You get this rip to the upside because you saw it happening. And this is why we sent this tweet out last night, because it's always important to remember this, especially on Mondays, because on Mondays, they're always about liquidity. They're always about trying to get liquidity, 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 liquidity. So this was a really, really, really good example of that story coming to fruition. And when they mark up the price, what you're trying to do is obviously if you haven't joined in from that process, you're now looking at this and saying, well, I need to find these imbalances, and I need to mark these imbalances on my chart. Because the idea is I want to try and get into these trades. And a lot of people say, but what if I miss it? What if I don't see it? Well, you do the next one. What do you mean I do the next one? You do the next one. So does everybody see the next one? Well, yes, it's right there. It's right in front of you because they ran that liquidity. And then they marked up this price, which means that that's the next one right there, is it not? So you're now going to be looking to try and buy into this little zone. Agreed? And when they marked up again here, you're then saying, okay, well, I'm going to be looking at this one and trying to find a way into that one as well. And so you just keep looking. You just keep finding the liquidity grab, finding the imbalance, and then joining back in. Now, you don't want to keep buying at high prices because that's going to get you trapped. But if you can see it, you can deal it. You can actually get involved in these trades in these areas. But obviously, the idea was that you want to get involved in this if you can, as early as possible, because that sell side imbalance gets replaced. So as soon as that sell side imbalance there, for example, gets replaced, you can start looking at that and saying, well, if that guy goes bid at this price, I can join straight in here, couldn't I? Because that's the same as having a big red area on your NinjaTrader chart, isn't it? And this is the same as having a big red area on your NinjaTrader chart again here. So when the price goes above those two imbalances, you've got them hook, line, and sinker. And you can jump straight into that and say, get me long, and you're the guy that causes that pop. Because what did they do with this imbalance? They bought it, didn't they? They didn't sell it. If they sold it, the price would have continued down. They didn't sell it, and they didn't sell this one either, because the price would have continued down. So if the price goes back up through that, it is a buy trade, absolutely a buy trade. And you've made a massive amount of money on that buy swing. So I think this is incredibly important, which is why we're going to be covering it in today's classroom. So we're getting started in classroom, guys, in maybe 2 minutes. 2 minutes. If you want to do an exercise with us, get a demo account open. Make sure, double check it, triple check it. Ask your wife to make sure it's on demo account if you want to trade along. You know, you don't want to be making a mistake here.